How we doing, everybody? Today I'm going to be going over the introduction to futures trading. It's going to be kind of going over basics of what futures trading is, what we do in our Discord, and kind of a breakdown behind everything. So, to start off with, what are futures? So, futures are derivative financial contracts that obligate parties to buy or sell an asset at a predetermined future date and price. The buyer must purchase or the seller must sell the underlying asset at the set price regardless of the current market price and the expiration date. Underlying assets include physical commodities and financial instruments. We'll be using indexes such as the S&P 500 or the NASDAQ. Futures contracts detail the quantity of the underlying asset and are standardized to facilitate trading on a futures exchange. Futures can be used for hedging or for trade speculation. So to continue on what are futures, traders and investors use the term futures in reference to the overall asset class. However, there are many types of futures contracts available for trading, including commodity futures with underlying commodities such as crude oil, natural gas, corn, and wheat, stock index futures with underlying assets that we do in our Discord, for example, the S&P 500 and NASDAQ, currency futures including USD, the DXY, Euro and British Pound, precious metal futures, gold and silver, which we also dabble into in our Discord a little bit. We do some gold trades. And then U.S. Treasury futures for bonds or interest rates and other financial securities. Those are kind of like the by definition explanation on what futures are. That's kind of like the cold hard dictionary fact on what they are. So a breakdown of futures. So in our Discord, we trade index futures. And we break down the S&P 500 and NASDAQ here below, where we kind of show you what each one profits. So, for example, if we take one mini position, which is one ES handle, it'll be $50. And that's if you go long. If you hit buys, $50 for every single handle. If you do shorts, you lose, or you make $50 every handle it goes down. And obviously it goes inversely. Like, if you have an ES buy, then it goes up one handle, you're up $50. If it goes down one handle, you're down $50. The micro ES, basically what that is that's 1/10 the size of a mini. So a mini is 10 micros. So if you took one micro ES buy, it goes up one handle, you make $5. It goes down one handle, you lose $5. If you do a sell and it goes down one handle, you make $5. If you do a sell and it goes up one handle, you lose $5. So that's kind of the breakdown. NQ is $20 a handle. What you'll notice when you look at ES and NQ moves a lot quicker. So like, I'd say like 3 or 4 handles up on NQ is equivalent to one ES handle. ES moves kind of slow. NQ is very volatile. It's shooting up and down really quick. So some examples, kind of like the ones I just went over, you guys can look over these, but the main point of this slide is that if you buy, you're betting the price will go up, and if you sell, you're betting the price will go down. So the difference between options trading and futures. I traded options for about 3 years. I just recently switched over to futures a little under a year ago. I think futures is a lot cleaner to trade, but options have Greeks and the futures do not. So options have expiries, like an option can expire at the end of the week. You'll have Greeks like the delta, theta, all those price impacts that basically options experience a lot higher volatility. Like a stock could go up, like say you're trading the S&P 500 and you did longs, like you did calls, then it could go up, but your options still could not go up, which makes it a lot more risky, but it also could go up way quicker. It's harder to predict. Whereas futures, that doesn't really happen. There's no premium decay in futures. So premium decay is when price spikes up or down really quick, and it affects the price of your position. And then futures price action is just way cleaner, like I said, overall, because futures actually has a set dollar limit. Like if the NQ futures contract goes up 10 handles, then you're up a certain amount. 10 handles down, you're down a certain amount. Whereas options, there's no set amount per contract that it goes up or down. It's very volatile. The best brokers to use to trade futures are Thinkorswim or Webull if you're going to deposit your own capital. NinjaTrader or even Tradovate, I didn't add it down, but both are good When you're doing funded accounts through prop firms like Apex Funded or Take Profit Trader, which I would recommend Take Profit Trader, but I'll have a video coming out soon about prop firms and all that stuff, but I would definitely look into prop firms. We have a lot of information dropped down in our Discord under Learn How to Trade Futures. You can go check that tab out, and you can check out Top Step, Apex Funded. There's millions of prop firms out there. You can go check them all out. Thank you for watching. Be sure to like, subscribe, and ask any questions you might have further about futures below. Have a good one.